traders, Gary Wagner here, just about 1 o'clock in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is January the 5th, 2018, and this is the Daily Report for gold and silver, our weekend review. And what a way to start the first week of trading of 2008, with rallies continuing in U.S. equities, rallies continuing in the precious metals markets, and even Bitcoin got into the action over the latter part of the week. Gold closing up about $1.30 on the day, $13.20.30, but that's after climbing over $20 this week. Silver, in essence, unchanged, $17.26. We are long gold. We'll talk about that and the particulars to that trade as we pull up our technical studies. Dollar bouncing back up after being under substantial pressure throughout the week, 91.76. And the big news, the historical news, is a Dow Jones Industrial Average over 25,000. That happened yesterday. Another 200-point plus rise today, 25,295. Standard & Poor's higher. NASDAQ breaking 7,000 earlier this week, closing at 71.36, a new record high. Bitcoin gaining almost 1,800 or over 1,800 on the day, closing at 16,775 on the CBOE and 16,790 at the Chicago Mercantile Exchange. By any accounts, this has been a most fascinating first week of trading of 2018. Gold has moved up respectably, considering that at the beginning of the week, this being Monday's candle here, gold was trading just below $1,300 per ounce and has closed just shy of $1,323. This week can be characterized by having a continuation of the larger rally that really began when we saw these lows come in December the 11th, December the 12th at 1238. And since that rally began, we have seen gold pricing increase by roughly $80 from the bottom here up to current pricing just at $13.21. Of course, we did go long a couple of weeks ago. We are still maintaining a long position, which sits at $12.65. Our stops are currently just below $1,300. And I can say that for the first time over the last couple of trading days, I have seen the first signs of a potential correction in the market or consolidation in the market. The one thing that I can say with some certainty is that the trend momentum is beginning to wane. The best way to look at that is through a Japanese average chart or a Henkin Ashi chart. We want to look at a couple of factors. One, body size in relationship to prior body size. For example, as this rally began, you can see that the body size for these candles is much smaller than the second leg or in accelerated momentum when the body size grows much larger. Yesterday, for the first time, we had a lower wick come into one of our candles. What that says is that yesterday's trading activity traded at and below the midpoint of the prior candle, and the first time it has done that since this rally began mid-December. Then lastly, we can see that this current candle, although the market closed relatively unchanged, down 30 cents, you can see that there is definitely a diminishing body size in relation to these most recent candles. Unquestionably, momentum is beginning to wane within this current rally. Now, one of two things can occur. We could simply be looking at a market that is going to consolidate, form a base, and then move higher, or consolidate and move into a corrective wave before returning to another impulse or rally wave. Therefore, my recommendation is maintain at $12.65 in gold. Maintain your current stop, which is just under 13. But on signs of weakness as the market opens up at the beginning of next week, we might look to trail that stop even tighter if we see that a correction is imminent. If we feel the market is consolidating, we'll let the stop sit where it is and then look to raise it later. And traders, the next chart that I do want to take a look at is a chart in silver. Silver at $17.25, down about 2 cents on the day. We can certainly say that we have seen this market have some resistance come in at around $17.25. If you recall from yesterday's show, we talked about this particular price point as a technical level in which we have seen it have a lot of resistance back in October as well as November of last year. We have seen this market come up considerably, and for those traders who have been long silver when we got long gold, my recommendation is to maintain your long position, maintain your stop just below $17 per ounce. Traders, we are looking at a weekly candlestick chart of the Dow Jones Industrial Average. The Dow closed for the first time in history above 25,000 yesterday, and today followed that with a 220-point gain, closing at 25,295. We can see that since the presidential elections held back in November, when the Dow was trading at 18,000, we have seen a dramatic price increase. Based upon what we're seeing in the fundamentals really moving this market, I wouldn't be surprised if the market was headed to 26,000. I am looking for higher pricing in U.S. equities over the next month. And traders, lastly, I do want to take a quick look at Bitcoin futures. This, the CBOE single Bitcoin contract. Over the last couple of days, what we have been talking about and what has been the overall characteristics of the market was the fact that it had really slowed down in terms of volatility, was actually trading sideways for the first time since Bitcoin futures opened up. And as I mentioned yesterday, my sense was that we were forming a serious base and consolidating at the 14,800 price point before moving to higher ground. That's exactly what we saw over the last couple of trading days. After forming a base like this at the beginning of the week, the last couple of trading days have taken Bitcoin pricing from just under 15,000 to just about 17,000. I think that we could see some minor resistance at 17,000. But that being said, I do believe that Bitcoin futures will make a move to move back towards 18 and even these record highs up at around 19 and 20,000 over the next month. I am still extremely bullish long-term on this cryptocurrency. Traders, to say that the first week of trading of 2018 was filled with some interesting action would be an understatement. And if this is any indication of what is ahead this trading year, it will be presented with tremendous opportunities. Record moves in the equities, superb rallies in the precious metals, and Bitcoin beginning to rise. I am really looking forward to the opportunities we see this year and are able to take advantage of. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review.